It's a slightly mixed picture across the Asia Pacific.
Markets baking in a higher probability of a Trump victory in November.
I think Vedanta keeps coming up with some or the other news development.
4,600 plus on the Nifty.
As far as budget is concerned, we think there is broadly going to be continuity.
The nominal GDP itself, I think, can get bumped up because growth in the last 6 months, growth forecasts have been revised upwards.
Stakeholder Advisory Committee, we understand the meeting is about to begin shortly.
Third consecutive day where markets have gone ahead and hit record levels in the morning.
This was an ask by the automotive industry to extend this policy to 2027 because it was lapsing in October 2025.
Vedanta Limited has launched its $800 million QIP.
Right now, it's absolutely flat, but yes, some positive takes there as well.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon. That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Nige D'Souza. And profit booking has set in. The Nifty is virtually at the day's low at 24,600. It started off with promise. We went on to hit new record high levels on all the indices. Now the midcap index is also off about 0.7% from the session tops.
Well, that's right, Reema. Just around 3 hours or so ago, you had way more number of stocks that were advancing than declining. Now that advance decline ratio is pretty much even Stevens. And what's taken place in the last few minutes actually on the headline index is Reliance Industries. Now, that has been the flag bearer of this market, has been holding one end up. But that slipped in the last few minutes. I think we should get the intraday chart of Reliance Industries. And for the last 60 minutes, the swing factor is going to be the Nifty Bank and the Nifty Financial Services Index, because both of them will play out the weekly expiry. So keep an eye out on both those two names. That aside, there are a few winners though. SBI Life moves to the high point of the day, so good going on that one. And I think Divi's Laboratory as well is seeing a bit of a spike up. But what else, Reema?
Well, consumption, so HUL, Britannia. So if you see the top gainers list, sectorally, you've got IT there, you've got consumption, FMCG names, and you also have real estate. So in the consumption pack, it's HUL, and that's the top Nifty gainer today, up close to about 3%. Tata Consumer is also showing you a gain of more than 2%. Oil marketing companies like BPCL, IOC, HPCL are reacting positively to the decline in crude prices. Coal India carries on with its momentum from yesterday. PSUs generally have seen buying. Bajaj Auto is up after reporting good set of numbers, largely in line, maybe slightly ahead on some parameters. So Bajaj Auto has gained about 1.5%. Telecom stocks have come in for some amount of buying, and IT names too. Infi, ahead of numbers which come on Thursday. Tomorrow is a market holiday, but Thursday post-market hours, Infi reports their numbers, and Infi is up nearly about 1.3%. Though the broader market is fairly active, and we'll get to that in just a bit. But lots of gainers, but on the losing side, it's largely Reliance Industries, which is hurting some pharmaceutical names, and banks are not performing. So HDFC Bank is absolutely flat. So how should you position yourself in the last hour of trade? Mitesh Thakkar is now with us for a few closing strategies. Mitesh, thoughts on the day so far? Come off quite a bit.
So I think the indices are showing signs of tiring and fatigue. I think, that's been the pattern for last few days. The hourly charts are now not, we are not seeing indicators make new high, but the price is still making new high. But since the indicators are not participating, the newer high isn't, giving you a burst of momentum, which typically happens with fresh highs. So I think this is a market where some profit booking should be done, or at least stop losses should be tightened. For the Nifty, in case we start breaking below 24,550, then I think we might see about another 150, 200 point kind of a correction to begin with, maybe more, but that's the minimum which I would expect. And similarly on the back Nifty, I think till we get past 52, 650, 700, I don't think I would want to take a long side trade. So, avoiding the indices, but trading with more bias on the stock specific basis is what we have been doing for the last few days, and that approach continues. I have a buy on Coal India with a stop at about 50 4 and a target of 530 can be looked at. And Piramal Enterprises, after a long time, the stock has come on the buy list. It's given a very good breakout today. So they should see more upsides. Buy here with a stop at 950 for targets of 1025.
Okay, all right. Thanks a lot for that, Mitesh. We'll come back to you as the hour progresses. For the time being, let's welcome our guest. We have Deepan Mehta from LXR Equities who joins us on the show. Hi, Deepan. Good afternoon and good to see you win. Well, Deepan, I wanted to ask you about the top winner on the Nifty today, which is Coal India. Let's run our viewers through a note that's coming from Phillip Capital. They have initiated coverage buy rating, target price of around 611 rupees a share. Their header says that the growth story is likely to stay longer for this particular company. And let's break it up into 4 big triggers. And some of them should come up for you on the screen. First, there's an industry tailwind. They're saying that India's power needs an additional amount of thermal capacity and in turn will require more coal. So they have put out a couple of numbers. The energy demand for the last year, it grew in low double digits, was at around 243 gigawatts. Now they're saying in the coming years, they're expecting that number to go to around 260 gigawatts and then move to around 400 gigawatts by 2030. So because of that, we'll require a higher amount of coal. They've also said that the government of India, well, they have sanctioned 88 megawatts of thermal capacities. So just, this 88 megawatts of thermal capacities, you assume that it functions at around 75% PLF. It could increase the total coal demand by around 400 million tons odd. And the third factor is that they're looking at commissioning annual rate of around 6 to around 8 gigawatt per annum. That compares with the 5-year average of around 4 gigawatt. If that is the case, then in fact the increase in the annual demand for coal will go up by around 30 to 40 million tons. So the first part is on the industry tailwind. Point number 2, that's with regard to the volume growth. They are factoring in a volume growth for Coal India of around 8% in the next few years. That's FY24 to FY27. They've given a comparative number. In the last 5 years, India's coal demand grew by around 4.8%. And Coal India shipments, well, they grew almost mirror image at around 4.9% odd. Remember, Coal India fulfills close to around 80% of India's coal production. So it moved more or less in line. For the next few years, that's from 2024 till 2030, they are saying that Coal India's volume growth could grow by around 8%, though the thermal coal demand will grow by around 5.5%. Why is it outpacing the coal demand, the thermal coal demand? Because there'll be restart of some of the thermal projects, and also the government intends to reduce the imports of coal. So that explains why the volume growth will be higher than the coal demand growth. Point number 3, profitability they're saying will stay around the 500 rupees per ton, which will be more or less at par with what we saw in the past year, that's 2024, but it'll be significantly higher than what we saw in the previous decade. And point number 4 is they're talking about the solid balance sheet that Coal India has. They're sitting on cash of around 27,000 crores. They also have a capex lined up of around 20,000 crores on. But they're saying the cash burn will be lower than the cash generated. So that's why the cash per share will only go up from here on. They are penciling in a number of around 69 rupees per share in comparison to around 44 rupees per share. So basically, cash generation more than capex. They highlight a few risks though. If there's a sharp fall in international coal prices, in case there's a delay in construction as well as ramp up of capacities, and if there's higher than expected production from private miners, if that's the case, then it reduces Coal India's pricing as well as volume offtake. So put all this together, Phillip Capital, they have initiated coverage on Coal India and they have a target price of 611 per share. Deepan, what's your view on these? Some of these stocks, they seem to be coming back in the last few days. We've had Oil India that gained in Friday's trading session. Then you had ONGC yesterday, and today you have Coal India. So it seems the street is suddenly taking notice of some of these PSUs that traded lower multiples, high cash generation, and have a dividend yield as well. Anything you like from here?
Yeah, good afternoon, Nigel. Thank you for having me on your show. I think in a situation where there are so many high PE stocks and even the PSU stocks are trading at exceptionally high PE multiples, I think coal and oil marketing companies, to an extent PSU banks, are the only kind of categories within the market which are still trading at single-digit type of PE multiple. And Coal India especially has got nearly a 5% dividend yield as well. And I think all the arguments put forth are pretty compelling. There was a time when ESG investing was a lot in fashion, and Coal India, being such a big polluter, was being avoided by a lot of the fund managers who were very conscious of ESG score. But now I think it's been well established that conventional thermal energy is here to stay for many, many years. and many decades, I would say, and they will coexist with wind and solar energy because as a backup and also at points of time when there's a surge in power demand. So from that point of view, Coal India certainly has a decent future. And this is one company, I think, gradually under the BJP rule, it's as with all PSUs, the overall efficiency levels are improving, and that's reflected in the corporate numbers as well. So don't go by the track record, but I think that certainly this company can have a higher P multiple, and there could be stability in earnings as well. So I think that it's a stock definitely to be slightly overweighted.
By the way, Himadri Specialty is a company where you are seeing Himadri Chemicals reacting to their numbers look good. 26% revenue jump, some expansion in their margins. Now margins stand at 16%, and that's driving a 42% increase in the company's profitability. Even today's, you can see that spike up post the numbers. Let's talk about telecom, because that's another sector which is on our radar. Now, first on Bharti Hexacom, which is a recent listing, there have been two initiating coverages, one of them by JP Morgan and the other one is IFL, and both of them have initiated coverage with a bullish stance. So for JP Morgan, the target price stands at 1,280, so a little bit of an upside from where the stock currently is, about 10 to 12%, post the 7% gain. Now, the key reason why brokerages are so bullish on Bharti Hexacom is that now Bharti Hexacom is a pure mobile services company, but they operate only in two circles, Northeast and Rajasthan. Here, the tele density is lower, which means fewer people have SIM cards, and therefore the opportunity to grow is higher. Plus, the cost of acquiring a customer is lower compared to rest of some of the other markets, and that's also a positive. And now that we are in a rate hiking cycle, there has been a tariff increase, and even Bharti Hexacom has taken a tariff increase similar to what Airtel has. It will benefit Bharti Hexacom the most because the leverage is the most. Unlike, say, a Bharti Airtel, which has other businesses, like they have the B2B businesses, they have the homes business, Bharti Hexacom is a pure wireless business. So the benefit of the tariff flows through the most on Bharti Hexacom. So that's the reason why the stock is active and brokerages are very bullish. But the other bit of news is positive for Airtel and Vodafone Idea, and not so much for Reliance Jio. Now, if you remember, telecom companies are saddled with AGR dues. This case has been going on for a very long time, and currently for Vodafone Idea, the AGR dues stand at 70,000 crore rupees, while for Airtel it stands at 36,000 crore rupees. Now, the companies have been arguing that there are mathematical arithmetic errors in the way AGR is calculated, and therefore they've been going out to the Supreme Court. The Supreme Court once said that no, what we said that you have to pay the AGR dues still stand. But now, yesterday, Harish Salve appeared for Vodafone Idea, and he once again said that we want an urgent hearing of the AGR dues. They filed a curative petition, and the Supreme Court has agreed. And therefore, the street has gotten excited or hopeful that maybe some relief is coming. Because if Vodafone Idea has to remain as a viable, competitive third private player, then it will need relief on the AGR dues. Now, the street is assuming or hoping for a 50% cut in the AGR dues. And if that comes through, it's a big positive for Vodafone Idea and even for an Airtel. So that's the latest bit of news coming through on telecom. Dipan, I know we've spoken a lot on telecom in the past, and you've said the best telecom story for you is Indus Stars. Isn't that correct? Would you look say Indus Stars, I remember, is your favorite play, but would you look to say add a Bharti Hexacom? And what about this news? If that AGR relief comes through, is it in the price, or do you think there is a tactical play involved here?
Yeah, Rima, I don't think the AGR, any relief on the AGR dues is in the price as far as Bharti is concerned, or even Vodafone for that matter, because it can go play out any which way. And if it does come through, that's extremely positive for these companies. But I think I agree. I still maintain that Indus Towers certainly is a better play on the telecom industry. It's trading at a discount to its other global peers. And with the overall health of the telecom industry improving, they should be able to get higher yields as well. So from that point of view, I think we like Indus Towers, but pure play Bharti Airtel also is quite interesting.
Okay, all right. Well, Deepan, I wanted to ask you about a couple of these other names that are moving around in the last few minutes. Hero MotoCorp actually has moved to the lower point of the day. That stock's seen a good rally. For the time being, it's down a little bit. What's your view on Hero MotoCorp?
Nigel, I think that valuation-wise pretty attractive, and with good monsoon, overall rural prosperity gradually improving will benefit two-wheeler companies, especially Hero MotoCorp, which has a very large exposure to the rural market. Some of the new models also have been pretty well received. So it could be a steady performer over the next 2-3 years or so. But look, we need to be mindful that the industry is undergoing a lot of disruption. And the leader will be a company which has got a very solid base when it comes to two-wheeler EVs. And I would place my bets on Ola Electric, the way they are scaling up operations and the kind of backward integration they're doing into actual manufacturing of batteries as well. So while I think there's a good trading rally in all two-wheeler stocks, monthly numbers also have been very good, much better than passenger vehicles. So from that point of view, I think next 2-3 years looks good, but you cannot factor these companies as great long-term investments with a holding period of 5-10 years or so, because of the kind of changes taking place within the industry.
Okay, that's the view coming in on two-wheelers. What about, the budget is 1 week away, and I wanted to get your views in on defense, because these stocks have had a phenomenal run. Even year to date, a Cochin Shipyard is up 300%, Garden Reach is up 180%, Mazgaon Docks is up 135%. Do you think we'll get something in the budget which could keep this rally running on defense stocks? Today, the rally is paused, so the stocks are not doing too much, but they haven't fallen. They're just down flat or maybe down about 0.5%. But do you think we'll get anything in the budget which could push up the defense stocks further from here?
See, Rima, the disinvestment figure is a big factor for the PSU companies. And ironically, whenever the government announces a disinvestment figure, PSU stocks actually tend to rally, which I don't understand why, because actually there's going to be more supply in the market. But I think that once the government, opens up the liquidity for these companies, PSUs, especially defense PSUs, some sort of a cap should get formed, because these counters are extremely tight and there's very low floating stock, the government being the largest shareholder, and it doesn't take much to drive these stock prices higher. Investors, especially professional investors who already invested, when they get fresh money, they're buying the same companies and taking the stock prices higher. And valuation-wise, you cannot justify buying into any defense PSU. So I would say that if you're invested, remain invested. But more or less, I think the entire upcycle, the discovery process is over. And from this point on, it would at best move in line with earnings or even slightly lower, as P's will get compressed considering the nature of the business.
Okay, all right. Deepan, I wanted your view. We have discussed ITD cementation in the past. The stock saw a sharp downtick on that news that the promoter entity could be looking for a buyer, but it's actually recovered quite a bit from those lows that we saw on that day. It's at around 510 rupees odd. From this space, any other company you like? I'm looking at Vascon Engineering. The stock is up more than 10%, and it's one of the top volume winners today. It's been a relative underperformer. What's your preference over here?
See, I think that ITD cementation per se also is a fantastic blue chip company, and whoever the new owners are, I think they'll also really take the company to the next level. I feel there's a lot of demand for the type of projects that ITD does. Not only does it do typical road projects, but it's a lot into ports and metros as well, where I think it is pre-qualified for most types of projects, which is a big advantage. So I'm still positive on ITD cementation. And of course, I think if you want to play it safe, there's always Larsen and Toubro. Every now and then we are seeing the order book, them winning new orders. Order book position remains really strong. And the kind of order wins they have got in the Middle East, I think that is really quite, I would say, impressive and should sustain growth for many, many years. So very positive on L&T also. Great value being created in subsidiaries as well. So I would say between these two companies, we are pretty much fine. Amongst the capital goods manufacturing companies, of course, there's one company which comes to mind. Again, disclosure, we and our clients are invested, is Praj Industries. It's got impacted a little bit because of government's sugar policy and ethanol policy, but long-term prospects are great for this company as well.
For L&T, its global credit rating is higher than India's sovereign rating. So both Fitch and S&P Global have assigned a BBB plus rating for L&T, which is 2 notches higher than India's sovereign rating. And that is a positive for L&T's overseas funding, considering the kind of work that it does in Middle East. Dipan, one final word on Z Entertainment. Now, the stock has struggled with that merger with Sony going nowhere. They've got the shareholder nod for a 2,000 crore fundraise. Will it do the stock, the company, any good?
No, Reba, I think that it's disappointing. And see, underlying fundamentals, if they were good, if there was decent revenue growth, profit growth, they were making progress on Z5. If there were underlying improvement in the financials and the overall working of the company, you would still consider, but that's not visible in the earnings. And they are going to deal with very large competitors coming into play. So I would say that, and also the entire entertainment patterns are changing, habits are changing. So too many headwinds for Z, and it's a low P stock, I understand, but I'm not looking at it in positive light. I'd like to avoid Z at these levels.
Okay, Dipan, thank you very much for joining in. We'll get into a break. On the other side, we'll invite Shiv Sehgal, President and Head of Nuvama Capital Markets, on the other side.
Okay, welcome back. You're with us here on Closing Bell. 30-point change on the Nifty. We're at about 24,600 plus. But, as we discussed in the morning as well, the day is not really about indices, but about the stock moves that we are seeing. And there is more than enough, which I think is keeping everyone occupied. Now, let's talk about some individual names. Bajaj is buzzing in trade after it reported its first quarter numbers. Stock, of course, has done very well. I think the best performing auto name, perhaps right up there with Tata Motors from the four-wheeler pack. Sudarshan is here to run us through the details of the numbers. Sud.
So two-wheeler major Bajaj Auto has reported numbers for the first quarter of FY25, and numbers were higher than estimates as well as higher year on year. And it was led by healthy volumes and better realization. Volume growth has come in line. It's up 7% year on year at 11.02 lakh units, and realizations were higher than estimates. It saw a growth of 8% to rupees 1.10 lakh. Now, if you talk about the headline numbers, profit is increased 19%, revenue is up 16%, and it's supported by favorable mix. On the operating front, EBITDA has risen 24% and margin has come in 120 bips higher to above 20%. And company says both realization and cost reduction have aided margin in the first quarter. Now, if you talk about the segments, domestic business has registered double-digit growth for 9 successive quarters. Exports revenue have seen double-digit growth, with Latin America posting its highest ever quarterly revenue. In the two-wheelers, Pulsar continues to see double-digit growth, and it has sold more than 19,000 of units of Triumph in the first quarter. In three-wheelers, volume growth was in double digits for 4 consecutive quarters. So overall, it was a good set of numbers from the Bajaj Auto for the first quarter.
All right. So thanks very much for that. So that is Bajaj in focus. Shiv Sehgal is with us, President and Head of Novama Capital Markets. Shiv, good to have you with us here. Thanks for your time. We just want to start by talking about the budget, which is not very far away now, a few sessions away. That one likes it or not. I mean, every year there is chatter about taxation, especially on stocks, which comes through. So I want to just ask you whether that is the big risk really for markets, because I mean, everything is done very, very well, and now you've got to perhaps also start to think about what could cause a bit of a pullback, and is taxation perhaps the number one reason which could do it if it were to come about?
Firstly, thanks, Prashant, for having me on the show and inviting me. It's always good to have a chat with you guys. I think, I can't even recollect the number of years we've been talked about before the budget, or the interim budget in this case, when taxation has become chatterbuzz. To be honest, I think, yes, there is an element that, given that markets, the euphoria that has been created in the markets and the returns that we have seen in the last couple of years, there is a natural tendency for people to talk about the fact that there could be a change in the taxation regime, especially in the short-term capital gains tax. If you were to ask my opinion, I don't think it's on the cards. I think markets will continue to climb this wall of liquidity that we perceive in India. And, India, I've been quite publicly been calling this a great phenomena for India. And I remain a very strong bull in Indian markets. And I think we will continue to carry this uptrend into this second half of this year as well.
So what about the argument about valuations? How do the valuations stack up now, according to you, in the global context? And where is it that you find value now, Shiv?
So great question. I think, in every, I would say, corporate boardroom and investor chatter, valuations are talked about. I think there is no doubt, given the fact that, Indian markets are up 100% in the last 5 years, and even global markets, given the global liquidity post-COVID, has seen a tremendous return to investors globally in different asset classes as well. It is a natural tendency to talk about where valuations are, and yes, they remain stretched. But I think I would break it down into a few segments here, Rima. The reality is that everywhere you look at corporate earnings in India, we find ourselves in a sweet spot. And I think there is a large runway for us to continue to grow around that high teen, 15 to 20% CAGR for corporate India. And as long as that runway and return on equity is maintained, valuations and EPS will continue to remain high and lofty. We are nowhere close to, in terms of the peak that Indian markets have seen in previous regimes, especially in 2007 and 2003 to 2008 bull market. And I think, as I said, this time around, we also find ourselves in a very sweet spot from an India context, that global growth is slowing down, and large asset allocators will find it difficult to deploy the kind of liquidity that India is now showing. Let's not forget that along with this market rally, we have gone from a 2.5 trillion market cap to 5.3 trillion, 5.2 trillion today. And to give you some more anecdotes, I was looking at the number of companies that are more than $1 billion today compared to last 5 years. India had about 300 companies, which were more than $1 billion market cap in 2020. That number is almost doubled. We have 600 publicly listed companies today that have a market cap of more than $1 billion, which also means that we are continuing to deploy more liquidity. Of course, the major theme has been the domestic mutual funds continuing to grow. Even there, their number was less than $100 billion in equity, and now they're managing, in excess of 330 billion. So from every stat, whichever way we cut the cloth, I think the statistics are showing that India remains on a very strong trajectory.
Hi Shiv, good afternoon and good to see you in. You and your team, I believe, are very, very busy with all the fundraise as well that's taking place in the market, but those are individual stocks, so we'll keep that aside for the time being. How do you approach the consumption theme? Some part on the street believes that staples require now a bit of a look, but you're in the camp that's still bullish on discretionary consumption. Tell us more about that.
So I think, you're absolutely right. The one pain point, and I think at least in the investor and analyst community, the rural demand has been the weak spot in India lately. I think monsoon has been pretty robust and remain on track for a healthy season this time around. And I think, if you look at it in the context of what happened with elections, a lot of investors also attributed, the BJP's weaker than expected performance to rural stress. And I think that has raised expectations. You just asked me a question on budget. I think going into the budget, there is an expectation in the investor community that some targeted spending programs by the government to address some of these concerns are on the cards. As we all are aware, the government has been reducing revenue expenditure to support the infrastructure capex. And well, that is in a longer term trend, a very welcome boon. I think it is possible that the needle swung a bit to the extreme, and I think some restoration of that balance is needed. And we are kind of seeing that in the rural and FMCG upturn. Our expectations are that you will see growth improve by about 8 to 10% in this corporate earnings, which have just started. And already companies are indicating about 3 to 4% growth from the previous quarter already. And market is kind of anticipating that rotation as well.
Yeah, no, absolutely, and we'll see what happens. We, by the way, Shiv had a couple of infrastructure experts in the morning from CRISIL, and we had Vinayak Chatterjee as well. And Vinayak made some points saying that on infra itself, he expects a big, as compared to the interim budget, where the central government sort of budgeted number was about a little over 11 lakh crores. He expects the number in the final budget to be upwards of 13 lakh crores, 13.5 odd lakh crores or so. So significantly higher is what he expects the proper full budget to be. So I think, consumption, yes, but I think infra as well remains pretty much a focus area. You'd agree?
100%. So if you look at infrastructure investments, I think, the estimation that we have is that it will total about a 1.5 trillion over the next 5 years. And I'm talking about dollars here at a CAGR of almost like 15-16%, right? And that will continue. We have already seen the infra theme play well out in the last 2-3 years. And I think we are at the cusp of a very long-term trend and runway here and India needs it, right? It's not that it is just an investor story. It is also the fact that it is laying the foundations for a much larger runway for the logistical, runway for India and the infrastructure that India needs. As we are becoming a much larger attention seeker and driving global economic growth today, right? If you look at even this week's numbers, what China reported versus what India is reporting, we continue to remain a market darling, not only just an EM perspective, which we were, but now I think in the next couple of years, and the government has also talked about this a lot, the runway for the next 25, 27 years, the India 2047 theme, and the goals and the aspirations that both the government and the private sector have, I think a lot of that will be led by infra and the derivatives of infra, which also means real estate, logistics, supply chains, the road infrastructure and the water supply chain and infrastructure as well. So that's a theme that we are very bullish on, and we continue to remain quite robust on that.
As a house call, you believe IT has bottomed out, right?
Absolutely.
Okay.
I think
not everyone's convinced. They think that it's going to happen, but maybe 6 months down the line, 9 months down the line. But according to you, it's already happened.
So I think, the sector rotation is on. TCS reported some decent numbers. And the way I look at it, Rima, is that valuations are now for the IT sector about a 25% down from the peak. We are now at a 5-year average versus during COVID. If you looked at, the first year, we saw, a bit of a, overbought situation, which has now corrected in the last 12 months. The sector, to me, seems in the investor community is slightly underowned. And we feel that the IT sector is bottoming out, as indicated by an uptick in the hiring numbers as well. And, a lot of that is also driven by the GCCs and the kind of growth that we are seeing in India. And let's not forget, we keep talking about the demand demographics and the upskilling that is happening. And I think there is a shift here where global GCCs are coming to India, and that will drive a lot of this demand for the IT sector as well.
Okay, all right. Shiv, appreciate you stopping by and giving us your take on the markets as well as on the individual sectors. Too bad we can't discuss stocks, otherwise it would have been a little bit more exciting as well. Thanks a lot for joining in. Well, I think we need to take that short break, Rima.
Sorry, we do need to take that short break, but here is an important note for you. Coming tomorrow, 9 a.m., we have a very special offering, and this is a big CNBC-TV18 exclusive. So just ahead of the budget, one of the world's top market strategists will be coming to the CNBC-TV18 studios. We're talking about Chris Wood of Jefferies, and he will make his bull case for India. Also, don't miss out on an exclusive chat between Chris Wood and D Street stalwarts Ramesh Damani and Utpal Sheth. All this coming tomorrow, 9 a.m. only on CNBC-TV18. Welcome back. Let's get to another important story. The Uttar Pradesh government has extended its electric mobility policy till 2027. What does this mean? What are the implications? Parikshit joins in with the details. Parikshit.
Well, yes, this is an important aspect of electric mobility. The UP government has extended the scheme that they had launched to 2022. The scheme was due to expire in 2025, and now it has been given an extension till 2027. Now, what has exactly happened? Well, the government has extended the scheme with the unutilized amount. Now, this is less than 500 crores, roughly around 450 crores in total. This is the unutilized amount from the original scheme. What this says is that there will be a total outlay of 100 crores for a maximum of 2 lakh electric two-wheelers. The cap on subsidy is 5,000 rupees per electric two-wheeler. When it comes to electric cars, the cap is 1 lakh rupees each for every electric car. The maximum here is about 25,000 electric cars and a total outlay of 250 crores. 400 e-buses to be subsidized with a cap of 20 lakh rupees each. Total outlay here is 80 crores. Maximum 1,000 e-good carriers to be subsidized with a cap of rupees 1 lakh per vehicle. Total outlay being 10 crores. So this is the overall objective of the scheme, to increase electric vehicle manufacturing in Uttar Pradesh, also increase deployment of electric vehicles by private citizens and also by fleet operators and cab aggregators. It also mentions the exact number of vehicles which such cab aggregators and fleet operators can buy under the scheme. It has not said anything on the hybrid policy or road tax waiver on hybrid policy. The companies we spoke to, which are in the business of making hybrid vehicles, say that they understand that the road tax waiver on hybrid vehicles, which was given earlier this month, continues till 2027. But of course, we are awaiting a clarification from the UP government. Sources had told us that very soon a note would be issued to clarify the range and the price of hybrid vehicles which will receive the road tax waiver exemption. So for the moment, this is the UP Electric Vehicle Mobility Scheme, which has received an extension to 2027. We are still awaiting a clarification on the price range for hybrid vehicles. At the same time, the central government is working on the FAME 3 policy. H.D. Kumaraswamy, the Union Minister for Heavy Industry, said that the FAME 3 policy would be implemented soon, subject to PMO and cabinet approval. He also said that the government is considering views from the industry on rationalizing the cess and tax burden on hybrid cars. Take a look.
Okay, thank you very much for that, Parishit. The mid-cap index is absolutely flat, but lots of interesting movers. So Alembic Pharma has a 10% gain. Natco Pharma is up nearly 6%. Alembic Limited, the API manufacturer, also has a gain of nearly 5%. LIC continues with its up move, was up yesterday, it's followed it up with another 4-5% gain. JM Financial is on the cusp of nearly hitting that 100 rupee mark. So JM Financial is coming for some amount of buying interest. You've got India Cements, which is gaining about 4.5%. Big movers seen in many of these mid-cap stocks. Bharti Hexacom, we've been talking about it, but even NOSIL pops up on the price and volume charts. NOSIL's volumes today are 81 lakh shares with the upside or a price move of nearly 7.5%. Get into a break on that note. We'll come back and get you a check on what dealing rooms are saying in our segment D Street Chatter. We also get you calls from our technical experts.
Back. Well, a couple of stocks have slipped from the Nifty itself. You have the Shriram Finance stock that had a 20% rally in the last few days. Well, that's come in for some profit taking. So pull up the intraday chart on that one. Garden Reach, well, they are backed an order of close to around 840 crores. So the stock is reacting positively to that set of news, up close to around 3% odd. Let's get in Nimesh, who's joining us on D-Street Chatter, to fill us in with how he's reading the flows and market setup. Hey, Nimesh, afternoon.
Hi, afternoon, Nigel. So, another day of consolidation, and the big theme seems to be the lack of participation from the larger institutions. You're seeing this delivery-based volumes going down in the cash market for the last couple of days, and that seemed to be the trend today as well. So, again, a bit of a lackluster as far as flows are concerned. The clear sector of the day is consumer names, big move on those stocks in anticipation of some relief in the budget. So, that's been a big trigger for those stocks to do well. The other sector which has seen some bit of buying interest is the telecom space. Across telecom stocks, whether it's Vodafone, Bharti Hexacom, as well as Indus Tower, all have seen delivery-based buying, and some bit of interest is back from larger institutions in the telecom sector names. But nevertheless, broadly the feedback is it's lackluster from a volume perspective, and it's a bit of wait and watch out of the big budget, which is likely next week.
Nimesh, what are you picking up in terms of specific stocks?
Well, the first stock on my list is Zomato, a big downtake on that name on larger volumes as well. In fact, the stock is under pressure after a large block deal. I understand a domestic mutual fund was a big seller, and they've been a large holder in Zomato for a very long time, and now at these levels they're doing some profit booking. So that's the reason why Zomato is under pressure today. The second name is Vascon Engineering, a small stock but big move on that name today, up 12% and a large volumes as well. I understand the mature interest is back, but also there is a strong indication that there could be a corporate development very soon. A potential fundraising in the subsidiary business is what the street is anticipating in Vascon Engineering. The third stock is IndusInd Bank. Again, while not much in terms of flows for the last couple of days, but looks like the selling is largely over and some bit of FI buying has resumed in IndusInd Bank at these levels. So that's the reason that stock is under radar. And the last is Techno Electric. Again, while the stock has been consolidating in the last 1 month, but if you look at the 3-month, 6-month chart, it's been a big move. In fact, the stock has doubled in the last 6 months if you look at the chart. But now understand the company is likely to raise funds via QIP very soon. So that's a trigger for Techno Electric.
Okay, all right. Nimesh, a quick word on Vedanta. Mr. Agarwal has said enough of dealing with the banks. I want to come to the market and raise some money. The QIP, there was a green shoe option. There's a fair bit of demand, is what I understand. There are some long only as well. They have upsized that QIP from 800 million.
Well, that's the feedback that I've picked up, Nigel, that now the book is upsized to $1 billion. And the key reason for that is there is a very strong demand, not only from domestic mutual funds, but some long-only funds. Even some larger HNIs have participated in the book, is what I understand. And of course, there is some portion of hedge funds as well. So it's a fairly covered book. HNIs, long-only funds, some domestic mutual funds, and some hedge funds as well. So that's the indication that I've picked up, that the size has been now increased from $800 million to $1 billion.
Okay, all right, Nimesh, thanks a lot for that. Mr. Agarwal, taking the opportunity, good demand, went ahead and took an approval for 8,500 crores odd. At the start of today, the initial book was around 600 billion, which had a green shoe option of around 200 million. And as Nimesh is telling us as well, that's likely to be upsized to around $1 billion odd. So the balance sheet will be in good shape. The capex as well that they were talking about, that will be well funded. Now it's for them to lose. So let's see how things go. The aluminium vertical, that's the one that's going to fire all cylinders in the years to come. Let's go across to Mitesh Thakur, who's joining us for some trading ideas, a buy or sell call for a reverse trade in the coming days. Mitesh, tell us, what do you have?
So, Nigel, I have a BTSC and Tata Consumer. I think, that's closing at the day's high, very good setup over here. It can even be a trading bet for a BTSC guy. Keep a stop at about 1165, look for 1190.95 as the target for tomorrow. And one sell call, that's on, Siemens or STBT on Siemens, with a stop at about 74.70 for targets of roughly around 74.20.
Thank you very much for that. Let's get to some of the big earnings which will be reported. That's Asian Paints. Numbers will be out tomorrow. Mangalam joins in with the key expectations. Mangalam.
Well, for this quarter, the numbers for Asian Paints are likely to be weak, and that is reflecting the stock price as well. It's down about 20% from the highs. The stock trading at around 52 times one-year forward earnings, one of the lowest multiples in recent times that we've seen on Asian Paints itself. And there are a couple of reasons why the quarter is likely to be weak. One, because there was elections, so a lot of labor movement across the country, and as a result of which the availability of painters wasn't there. And the second one was the strong heat wave, as a result of which, there wasn't a lot of painting jobs that happened on the exterior side. and in the interior side as well, also clubbed with the lack of labor availability. Volume growth for the company will be more than the value growth, and that's largely because of the inferior product mix. And the company is now taking a 1% price hike. So to that extent, the second quarter, and more importantly, the festive season quarter, will be extremely crucial for the company to watch out for. This time around, we're expecting a flattish sort of revenue coming in close to around 9,175 crores. The EBITDA declines by about 8.5%, so that would imply a margin correction of close to around 200 basis points. And the net profit on the back of that falls by about 11%. You're looking at a number closer to 1,400 crores. Domestic decorative volume growth this time around should be between 6 to 9%. And despite the company saying that there could be double-digit volume growth momentum in the first quarter, the street is not penciling in that number yet itself. And even that, if that number were to happen, the volume value mix would keep the value growth in check itself. Double-digit volume growth is what the company is guided for this year. Gap between volume and value growth will be in the range of 5 to 6%. And at the same time, EBITDA margin guidance for the company has been 18 to 20% for this entire year. The key triggers to watch out for Asian Paints, apart from this quarter's numbers, would be demand post-elections and ahead of monsoons, outlook for the entire year, capex and competition, because if the companies have been able to take a price hike in light of impending big competition, that implies that maybe they've been able to size them up.
Thank you very much for that. We will slip into a very short break. Even LTIMindtree will be reporting numbers tomorrow. Q4 was a subdued quarter, but the company had guided that things will pick up in Q1, and Q1 will be a growth quarter. So Asian Paints and LTIMindtree reporting numbers tomorrow. Get into a break. On the other side, Jay Bala from cashthechaos.com joins in next.
Welcome back. Keep an eye out on VMart. You know, the stock has moved to the high point of the day as we speak. It was down 3%. Even in yesterday's trading session, that one was bobbing around. And towards the end, it pulled back. So the intraday chart will tell you a better picture. And one of the stocks that Nimesh was talking about was Vascon. Some kind of corporate development could be in the offing. That one's moving higher on very, very large volumes. Now at the high point of the day, up close to around 13%. Good time to get in. Jay Bala from cashsecures.com. Hi, Jay. Good afternoon. What's your view on the Nifty, first of all? You know, we have just been climbing up one way, currently holding at around 24,600. What are the levels you're looking at?
Hi, Nigel. Good to be here. The next resistance for the Nifty comes at about 24,800, 24,990, around about the 25,000 mark. But the markets are quite stretched. And as long as the Nifty stays about 24,100, this current uptrend will continue. But keep a watch on the support levels at about 24,140 to 23,990. The market should stay about it. When a stretch market breaks the nearest support, that's the time for caution. But until that point, the trend remains higher.
What about Reliance Industries? That's the big drag today.
Yeah, I think it may still have a incomplete higher highs to complete around 3,400 mark. As long as the stock can stay about 3087, I think it's an incomplete move. But 3087 would probably mark the reversal of a medium-term move that started from 2023. But there are given the strong momentum, I wouldn't I expect that to happen. I would expect Reliance to stay about 3087.
Anything else, Jay? Good afternoon. Any other stocks?
Hi, Prashant. As a theme, the Tata Group looks pretty interesting. Most of the stocks within the Tata Group look giving me the early indication of a buy signal. Tata Tele probably the strongest out there, probably heading towards 100. But all names like Tata Tele, Tata Chem, Tata Communications, Tata Steel, Indian Hotels, Tata Consumer, all of them across the board are giving an indication that something could be brewing within the group. So that's something to watch out for. I have specific picks. One is Bajaj Finance. Bajaj Finance with long with a stop loss of 69.15 for a potential to scale 7,600. And in the mid-cap, small-cap space, I like KPR Mills with a stop loss of about 820 for fresh 52-week highs past 1,000 mark. But, as I said, the markets are quite stretched. Your allocation, you may want to go down to as low as 25% to 30% of your usual allocation. That's how you control risk.
Okay, all right. Jay, I wanted your view on the Bitcoin. The stock markets are preparing for President Trump to come back, and he's been known to be pro-crypto. I think he's going to be talking at a conference as well later this month. What about the Bitcoin? It went down, I think, all the way to around 56,000 on, and very quickly it's pulled back to $64,000. How is it looking?
Bitcoin is sending an ambivalent signal. It's warning of a potential for a risk off for the overall risk environment. Watch out for it. Probably it's going to do a counter trend rally towards 68,000, and probably it's, in my opinion, heading towards 41,000, maybe even 35,000 in the next quarter. But I think the recent high it saw at about 70K plus. It's probably a short to medium term top. So Bitcoin is giving some amount of caution for risk takers here.
HUL and ITC have moved up 10% this month. Anything in the charts?
Yeah, FMCG has been my recent favorite. I pointed out in April and May that it's heading for 60,000. And it's done 60,000, and the index is past that. We're probably going to see one more sequence of higher highs to come through. I think the pullback will stay above 58,800 for the Nifty FMCG index. And I think further higher highs are due. The best picks probably, and as I pointed out several weeks ago, it remains Umami, Dabur, which is going to be continuing to lead the rally. And HLL is continuing to add weight to the index. And ITC, as I said, I don't think it's heading for a new high, but further highs are due. But it's a counter trend rally for me.
Jay, typically, how are budget days for market? How does it pan out? I mean, usually, if you go back and see the last 10, 15 years.
Yeah, if you look at the time when Arun Jaitley was the finance minister, it had been alternating between a bullish reaction for the markets and a bearish reaction on alternate years. When it comes to the next finance minister, it's been more listless than unable to extrapolate that. But generally, the markets tend to price in what is anticipated from the budget. I think there'll be profit taking for the markets once the budget is through. When it comes to the markets from a technical perspective, it's running into time resistance on July 19th. So a bit of caution there. And when it comes to the US markets, it's come up to the all-time highs without clocking 1% drop for the last 75 calendar days, and not clocking 2% drop for the second longest time since the dot-com time. So some amount of caution is definitely required. So watch out for key supports. Maintain bullishness, but stay on the edge.
I mean, common sense. I mean, but it is. I think it's too common sense. Is markets are elevated. You're going into the budget. Maybe look to buy some puts or something. But the point is, it seems like a logical thing to do. But just to sort of, if you're trading short term, or maybe straddles or something. But the point is, markets are surprises on the upside, event after event. I mean, you only need to look at the election verdict, what happened after that. So, we'll see. Yeah, I mean, market levels are, we've done very, very well going into this budget. So 24,600 is where we are at. The sensex at about will end about 30 points higher. So absolutely flat kind of close is what we have going. Nifty Bank will come up on your screens, I think slightly down. And I think mid and small cap indices also will be on your screens shortly. There as well, there's very much. I think, although if you just sort of numerically look at what was up and what was down, I mean, clearly the momentum is with the gainers once again. 1,400 stocks nearly up and about 1,250 stocks which were lower.
So FMCG IT saw gains. Real estate index also did pretty well. So the gainers list had FMCG names like HUL, Tata Consumer, IT stocks like LTI and Mindtree. The top gainer today was Coal India. Oil marketing companies had an up day too. But on the way down, it was weighed down by Reliance Industries. It single-handedly pretty much took away most of the gains. Pharma on the back foot with Dr. Reddy's under pressure. Some of the private sector banks, not all, but a Kotak Mahindra Bank also weakened trade, and Shriram Finance took a beating.
All right, well, time to wrap up on closing bell then, but you don't go anywhere. You stay with us because Markets Forward comes up next.